Hey, Jason Sang with Caliber Home Loans here. I wanted to talk about something that's been going on in the news that I'm sure everybody's seen. I know my borrowers sure have. Lots of talk about mortgage rates going up and people paying for other people's credit and things along that lines. I think it's important to talk about what's going on to make sure that you're giving your client accurate information. There's certainly some truth to what's going on in the news, but that being said, it tends to be a little bit overblown. So let's talk about what is going on. So Fannie Mae announced that loans that are being delivered to them by May 1st are going to have higher loan level pricing adjustments. Okay, what does this mean? It means when a mortgage company closes a loan, sells the loan to Fannie Mae to get their money back, that when they deliver these loans, they have to factor in extra fees based on FICO scores. Now, this is something that has been going on for a long time. And Fannie Mae does adjust these from years to year, and this is one example of that. So here are the changes that are in place. And I should point out that these have been in place with whatever lender you're using for probably at least 60 days now. It's not for applications started on May 1st. It's for loans that are delivered on May 1st, meaning basically anything that funded, in March or April was being delivered in May. Okay, so these are already in place. People are already dealing with them. They're currently being reflected in interest rates. Let's take a look at what's changing. So, people with FICO scores of 720 to 740 that are putting 10, well, 5, 10, 15, or 20% down are the most heavily affected from a negative perspective. Okay, let's talk about a real life example. Say a $400,000 loan, somebody with a 720 FICO score putting 20% down, they are paying a 0.5% fee more than they were last year, let's say. That means on a $400,000 loan, a 1% fee would be $4,000, a 0.5% fee would be $2,000. Okay, there are currently loan level pricing adjustments in place, which I'm going to show you that table next. The other piece to the news that has been coming out is that people with higher FICO are subsidizing people with lower FICO. It's not entirely true. It is true that lower FICO borrowers are seeing a reduction in their loan level pricing adjustments compared to what they were paying previously, but this is not being paid for by people with higher FICO scores. Most clients that are applying with 640, 660, 680 FICO scores oftentimes are going to FHA product rather than conventional product. FHA product is not having these same adjustments that conventional product is. So this is more of a way for conventional lenders like Fannie and Freddie to attract some lower FICO borrowers that currently are not applying for conventional loans. Okay, let's look at the actual chart here. So as a lender, what we'll do is if we have somebody apply, there is a chart that cross-references their FICO score with their down payment amount. So let's talk some real examples. Let's say you have a 720 FICO score and you are putting 20% down. Okay, we would go to 720 and we would cross over to 20% down and we would say, okay, you are paying 1.25 points over the par rate. Okay, that is 0.875 points more than somebody with a 780 FICO score. Also, if you have a 640 FICO score and you are paying 20% down, you are paying 2.25% more than, or 1.875% more than somebody with a 780 FICO score. And this brings me up to another common question I get asked, which is, hey, I want to pay the lowest rate possible. And they mean lowest rate and fees typically when they say that. So how do I do that? Okay, well, let's use this chart for an example. If you have a 780 FICO score and you put 20% down, you are paying 0.375 points more than somebody putting 25% down. So if you want to put the minimum down and you have perfect credit, 800 FICO scores, let's say, and you put 25% down, you are getting the best deal available on the rate sheet. Similarly, if you have a 680 FICO score and you are putting 40% down, you are actually not experiencing any higher rate than somebody with an 800 FICO score. That's because as you put more money down, the risk to the lender for foreclosure becomes less and less. So they do not need to charge these pricing adjustments anymore. Okay, one other thing I wanted to point out here is that this is not the only time Fannie Mae has adjusted rates and fees or FICO scores or loan level pricing adjustments in general. Those of us who have been around in 2014 probably remember that people with kind of lower down payments, same thing happened here where they started charging more for people with 720, 740, 760 FICO even compared to people with 800 FICO scores. So this is something that we see fairly often. It is amplified by the fact that the market's getting more difficult and inventory's tight. So everything gets a little bit stretched, I would say. That being said, I hope this was helpful. If you want to get in contact with me to talk about this in any further detail, or if you have clients that you think could benefit from this, please feel free to reach out to me here, 253-208-5751, or you can email me. I appreciate it. Looking forward to hearing from you. Take care.